Hey everybody, this is Jim at SP500chart.com. It's about 4:20 on Tuesday afternoon, December 3rd, 2013. And we're going to do our usual thing where we look at what happened today in the S&P 500. You might say, why the S&P? Well, it seems to really be the broadest and biggest bag of stocks you can find. So, we could look at the NASDAQ, but that's tech heavy. We could look at the Dow Jones Industrials, but how many stocks are in there? 30? How many are in the S&P 500? Well, the name speaks for itself. Well, before we take a look, let me just remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw these lines on charts, but you have to draw your own conclusions from your own research, and please make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy who draws lines on charts. Okay, today is the third session in a row in which the S&P has lost ground. And just coincidentally, the last time we had the S&P lose some ground, it was 3 sessions back in the middle of November. And coincidentally, we got something that looks a little similar to what took place back here, with a few exceptions. And the thing that concerns me more than anything else is the fact that we have now broken this rising support line. Now, you might say, by how much have we broken this support line? Because you remember, the degree of which something breaks is important. So if we go to the lowest point in the day, the S&P support line was, let's call it 1803, while the low of the day was about 1788. So that's 15 points. That's pretty close to being that 1% that we look for. If it had been just 3 more points, I think that would have been a no-brainer. So what that would mean is, it doesn't mean that the wheels are going to come off the market. But what it does mean is that this line has probably flipped from being support to now being resistance. The good news is it is still going up. So since whenever you break a rising support line, you can't say to yourself with any degree of real certainty that now the markets cannot go up. I've done that in the past. I've sold out of stocks where I maybe made a 15 or 20% gain because a rising channel broke. And I sell right when that channel breaks, thinking, boy, I'm smart because I'm looking at this. And then you find out that it just goes sideways for a little bit, and then it trucks right on up. I'm not saying that's going to happen here either. I'm just saying it can happen. This is very different than when you have a horizontal support line like at a Head and Shoulders top, and you break that. That speaks a lot more of a more significant top than when you break a rising support line. Now, you can see that I've added a couple of extra lines to this chart. If you're the kind of person who's really observant, none of these blue lines were on yesterday's chart. This orange one was, but I'm revising what I'm looking at here. At first, I said yesterday, if we get over that orange line, and my thought was maybe we bounce on this green and we get over it, that should have signaled a renewed move up to likely at least test this gray line or even this red line up here in the 1820s. But now, it looks as if we are now in a small, at least what is now, a small descending channel. And part of that channel also has a wedge shape to it that you see was what we broke out over What time was it? I don't know, doesn't matter. Let's call it 2 o'clock. We had a break of this line here, and you can see that really things were trading down just like a descending wedge is supposed to. Then we broke out over that, had a little weakness, and then we started back with some late day strength. Those of you who are astute observers will recognize that even though it is a tiny, tiny pattern, it is nonetheless a very small inverted head and shoulders down here that formed from roughly, call it 11 o'clock on through to the end of the day. And that small inverted head and shoulders pattern broke out. Now you might say to yourself, and I think with justification, when you have a pattern, Jim, that's only about 5 points deep, how do you ever get technically significant above in this breakout when you're dealing in an index that is around 1800? Darn good question. And I think it's one I cannot really answer. All I can say is when you see this type of pattern, wherever it might be, it tends to signify at least some degree of a turn of direction. And when we're looking at bigger patterns, I always like to look for that 1%, but here we're not going to get it. Well, I take it back. We might get 1% over this line, but that would not... What am I trying to say? Our target from this line is 1/3, is about 1/4%, maybe 0.28%. So we're not going to get a confirmation by a 1% breakout over a pattern that itself only points to less than 0.3% of a move. So going into tomorrow's session, and by the way, you can see our extended neckline right here from this inverted pattern we had back here. You see how today's trading kind of bounced in and around that, bounced on it, came up, broke through it, then came back and it resisted it, turned into resistance, but we ended a tiny fraction above that line. So what I'd be looking for right now, I would be looking now at this top line, wherever this might break. I think that would be a pretty good indication that the S&P is ready to turn back up and to, at a minimum, backtest this rising support line that got taken out. And if that were to get taken, if that were to take a few days, for example, if we were to break out over this, then maybe slide back down for a back test even lower than where we were today, and that is a perfectly legitimate technical scenario. For us to break out tomorrow, then slide back down and maybe even back test at 1780 on Thursday. It's very possible. Then we may have some room to get a little bit of momentum to come up and actually make a new high in the S&P. But right now, this line is broken. This now should be considered to be likely resistance. And we have this little wedge pattern that we broke out of today, and that should be setting up a short-term reversal, but that would really be cemented, I believe, by getting over this line right here. And by the way, this line is nothing special except for a parallel line to this one right here. Nothing really that fancy about it. And finally, there's just one more thing I want to show you just for your consideration. And I'm not saying that this is necessarily an important feature, but it is worth pointing out. If we look at the line drawn over our last two, call them short-term tops, back on the 18th and again on the 29th, and we've drawn a line here we'll make it orange because we've gotten rid of our orange line. And then we make a parallel line. I just think it's interesting to note that we line up pretty clearly, line up between this line and this line, these two tops, and what is for sure this bottom, and maybe this bottom. Okay? No guarantees on that. Well, there's no guarantees on anything, but I just found that kind of interesting that those two lines line up so well in that way. So let's see if we get over this line tomorrow. See if the market can come back and give us a good solid back test on our broken support line. And if it can, then we'll evaluate and see what we might want to do then. As always, thank you for watching. Thanks for your time, and especially thanks for your support.